All right, good afternoon, everybody. Today is Wednesday, the 4th day of December, 2024. All right, so since our last meeting, we didn't do one the day before Thanksgiving, so we've had a 2 week span now, and so I guess this time what I want to go over, I want to show you what we have. All right, and I think I kind of might have lost sight of what my original intent was when I created TV trades at some point, and you know, dealing with people from all levels like I have been for the last couple of decades, um, I have a tendency to talk it. You know, I just skip over a whole bunch of levels sometimes, and I tend to talk it things that I just assume that everybody knows, and they don't. And so I got to kind of step it back. And I've gotten to the point right now where you really don't need charts. You really don't need to know anything except how to put a trade on. But even that's a step for some people. Some people have never actually even put a trade on. So it's the whole picture, really. Everything from the beginning to the end is what you really need to know. So before we get into all that, let me go over what it takes to get started. All right. If you go to tvtrades.com, tv-trades.com right here, tvtrades.com, go there. You can click on any one of these orange buttons. It's going to bring you down to this, down at the bottom. And to start, you need 3-day free trial, $25 a week if you want to start, just a weekly one to see if it's good for you or not. You can switch to a monthly if you want. It's $90 a month. You can switch to the annual if you want. It's $9.97 a year. This is 20% cheaper than that, and this is 10% cheaper than that. All right. Right now, I just put a link in there. So this is actually $8.97 a year. I'll leave that link open for a day or so. It's $8.97 a year. I put the link in the chat box already, so you guys can take a look at that if you want to. If you want to sign up for the annual at 100% discount, and then you don't have to worry about it for a whole year. It's up to you. If you're already on the monthly and you sign up for the annual, I'll just add it on to the end of your monthly, and I'll cancel that. If you're on the weekly and you want to sign up for that, or if you're on the weekly and you want to go to the monthly, that's up to you. You can do either one. You can do both. You can do whatever you want. All right, I'll make it fair to you. All right. So as I go through this, I see the evolution of how we went. If you start way back here at the very beginning, this is more what it was like in the very beginning. Going backwards up this web page, we had just the colors, and we used to have these big arrows, big fat arrows down here at the bottom that said, buy coming soon, like right here, where the blue was on the red background. It would say buy coming soon, and then it would say buy coming, and it was all down here at the bottom or up at the top. I only had it going at the bottom or the top of the screen. And as it moved on, all that text would slide over, and it was really messy. It was really messy, and so I improved upon that, and I made it a little bit better, and I got these other arrows in here. The different format of arrow that actually triggers much closer to the bar that you want it to trigger on, and gives you more information. All right, so I improved upon it a little bit there, and then I added things like the table was added, the risk reward, the stop, the entry point, all that stuff was added. And then what else did I add in here? The alerts. I added in a whole bunch of alerts that trigger before the actual trade happens. When we got into the sniper and the sniper stuff. Originally at the very beginning we only had the TV trades that would trigger at the beginning of the trend. We had like one here. We'd have, if you had a short trade, it'd be right here. If you had a long trade, it'd be right there. And if you had a short trade, it'd be over here. There was nothing in between. Then we had the mid-trend trade. Then we had the hot tips on top of the mid-trend trade. And then I created the sniper. And you can see the sniper added all these. This is more the mid-trend trade right here, the green ones. Added all of these green ones in here, and the sniper was just like it. So it's evolved. And then, I was trying to stay away from having any indicators at all on the charts, is what my intention was to make it so you guys didn't have any indicators at all. And, well, it evolved. Anyway, it evolved. And I added this down here at the bottom because this, when I created it, it was just so good that there's so many things you can do with it. And I'm going to get into that right now too. All right. And then I took it even a step further and I got rid of all the indicators. If you just want to trade off of this, you can just trade off of this. Right? I have the stock and ETFs, buys, stock and ETFs puts, futures, shorts, and futures longs. And all that stuff also goes into Telegram channels. So if you set up your Telegram, you can set up your Telegram so that it alerts your phone. Your notifications are on your phone. You'll get notified whenever a trade triggers. And I have basically 2 Telegram channels right now. I have one for the stock and ETF and one for the futures. But I'm going to break that up some more. And there's one other thing that I have. Now, this is still, to get to the trade table, of course, the trade table is a private page, and you can go to trade table, and in here you got to enter the password. And so all you guys who are active, you know what the password is. You got sent that the other day. I apparently have the wrong password on here, but password should be this 6354. That's what it should be, but clearly that's not working. Okay, it really does work. It just doesn't work for me right now because I've created too many things on here. But let's go to another thing. Oops, I spelled it wrong. Go to this page. There, you see that? So this is what the table looks like when it loads up here. It's obviously taking its sweet time to load up. But I added this. I added the Forex currency pairs in here. Now, I don't know why this is taking so long to load. It doesn't usually take that long. But, of course, it's going to right now. But the whole idea behind this was you guys get the signal sent right to you. All right? You don't have to have any charts at all. And this stuff gets sent to the Telegram channels as well. And while we wait for that to load, I guess I can go over here and try to clear the cache on it. While we wait for that to load, let me see in here. Nope, that's not the right one. Is that the right one? Close that. And alright, so it just went to trade table back 6. We'll hit unlock on this, and it's probably got the wrong password. There it goes. Okay, well this doesn't have the Forex signals on it. But that didn't unload the way that I wanted to either. Let me update that, and give me just a minute here, and I'll get this working for us all. But the table that I'm actually trying to show to you is this one. If you go to trade table back, if you guys go to trade table back, see it keeps diverting to 6. Then there it is. This is trade table back 6. This is what the trade table normally looks like. All right. So it gives you all these indications in here. Like these are the last ones that just came up here at 2 o'clock. Microsoft gave some, Meta and Microsoft, Tesla, they all gave some signals in here, Netflix. Now the thing about these, they're based upon pretty small time frames. All right. The larger the time frame, the bigger the target's going to be, and the bigger the stop's going to be. That is just the way that things are. Hang on, I'm trying to get to that. Here it is, WordPress. Right here, WordPress login. That's what I'm trying to get to. That's just the way that it is. I can, if you guys wanted me to put these on like dailies and stuff like that, I could give you a much larger time frame that would give you the same information in here. I will give you, larger stops and larger targets and all that if you wanted to do that. But if you're interested in that, of course, just let me know, and I'll be happy to do that. Let me go back in here for a second. And so that's what these tables look like. All right. And if you look at them in Telegram, Telegram, they look like this. Alright, this is what they look like in Telegram. So the last trigger was right here. It was a gold time frame. This is the futures signals. Alright, that's futures, and this is the ETFs and equities. So the last signals in here were right here. Now at some point I'm going to break them out into more detail. Yeah, I'm gonna break it out into more detail, and like I'll have, well, once I get the Forex stuff going properly in here, I may have a separate Forex channel, and I may actually have separate pages here where you have stocks and futures, private pages, one for stocks and ETFs, one for futures, and one for the Forex as I roll this out, as I keep moving forward with all this stuff. But let's get over here to the actual charts. All right. So going back to what I started with here, my original intent when I created this was that anybody would be able to come off the street and just say, okay, well, this is what a chart looks like. Most people who are brand new to trading, they don't know what range bars are. Even if you got some experience trading, a lot of people don't know what range bars are. But a brief introduction to range bars, every bar has to close either at the top or at the bottom. And so every bar has to exceed the range of the bar to get to the next bar. So it's true price action based. All right. It's not like a time based bar where every bar has a certain amount of time in it and just, it runs out of time, it just goes to the next bar. Or anything that's zero based where every bar has, wow. I think WordPress is messed up right now. Where every bar has, it counts down to 0 and then it just goes to the next bar. Range bars aren't like that. They have to have price action to move. Otherwise, they just stay in the same bar. They won't exceed the range of the bar, so they won't go to the next bar. That's just the way that works. Let me see if I got anything open here that I can close. Doesn't really look like it. Okay. Anyway, that's the way the range bars work. So I like to do things with range bars, but with the Forex, the signals that you see coming out of the Forex, if you go here to this log, you can see the USJPY. This was on 100 range bar. These are on 100 range bars, but a lot of the ones that are Forex are going to be on something else. They're going to be on like the 5-minute or the 15-minute. It doesn't look like we had a whole bunch of them here today, but they're going to be on like the 5-minute or the 15-minute chart. Like this one right here. This is a 15-minute on USDJPY. Now, why isn't that showing up over here? Oh, it is right there. But that's the USDJPY, and I don't have any indicators on here. If I did have indicators on here, you would see the indicator that's giving you this right here. It's a buy, so it would be like right in here. And to see those indicators, the idea to make it easy for everybody was just to have it so you just throw the TV trades on. You don't have to put any changes on it at all. When it loads up, it's going to be set for long trades when it loads up. See, right there is what triggered that. That's what triggered that right there on the 15-minute chart. And that's how it is. With this particular thing, this particular time frame, when this bar runs out in 14 minutes, whatever it is, 14:06, 05, 04. When this bar runs out, it's just going to go to the next bar. So you don't know where that's going to be. So as far as price action goes, there's no guarantee that you're gonna have any kind of price action within that bar that's going to make it go to the next bar. Let me check and see if there's any questions over here. Yes, the thing about the range bars is I can teach you how to use them and how to best use them. And if you do that, the chances you want to go to another bar is they're going to be pretty slim, because there's just so much more information that you get out of a range bar than you do out of this. Like with this bar right here, I know it opened right here, and I know it's going to close in 13 minutes. And it's going to close, but I have no idea where that's going to close. No idea whatsoever where that thing is going to close. let me try to open up a different browser over here. Try a new window and see if I can't make this work the way that I'm trying to make it work over here. You guys don't see all the struggling I'm doing on another monitor right now, but hopefully I'll get it to work. But like this bar right here, I mean, we know now in 12 minutes, 12 and a half minutes, it's going to go to another bar. We don't know if it's going to be up here. We don't know if it's going to be down here. We know it opened right here, and that, you know, eventually that's going to be in another bar. If these were range bars, we know exactly where it's going to be. All right, if they were range bars, but they're not. For the larger time frame things like the Forex stuff, you know, when I originally did it, I had it generating trades based on a smaller time frame, and it was, you know, the equivalent of having like a 2-cent trade on a $10 stock or something like that. And you know, that's not useful for anybody. And you know, honestly, I don't know much about Forex. I'm going to learn about Forex. I'm going to have a crash course in Forex myself, and learn about Forex. But I know the signals that are generated are good signals. You know, right now it's only got the long set by default. The TV trades only has the longs set. All right, by default. So if you want to see the shorts, you got to turn them on, and then it'll put the shorts on too. See the shorts. But by default, it's only going to give you the long trades. Okay, now the TV trades only happens at the beginning of the trend. It doesn't happen in the middle of the trend. It happens at the beginning of the trend every time. It's the only time it's going to trigger at the beginning of the trend. Alright, like this one right here, for instance. If you wanted something to trigger in the middle of the trend, then that's where the mid-trend trades come in. Okay, the mid-trend trades. And they are, if you go in here, you just turn this on, you click MTT. That's going to be the mid-trend trades. You'll see some of those populate in here. Like there's a purple one right there, and the long ones are green. See these green ones right here that populate in the middle of the trend. Now usually you're going to get a notification ahead of time. For all of these, really, usually you're going to get a notification ahead of time. If you see a red bar on a blue background like that, you're going to get a notification. If you have it turned on, you're going to get a notification that says get ready for a short trade. Alright. And if you see a black arrow like this, you're going to get a notification that says the next bar could be the short. Alright, that's going down, and when it's going up, it's going to tell you the next bar could be a long trade. Alright, you don't get them on every one of the mid-trend trades, but you get them on most of them. Alright, so this is the way it's evolved over time. And in the beginning, we didn't have any indicators at all. None. Right? There were no indicators at all. So, you know, in the evolution of it, you know, the majority of the people that, Jeff, with so many options, you get confused on which way to go. I run an analysis on how many trades are successfully like a 30 range, what percent of TV trades work. I have not done that kind of analysis, Jeff. I'm just telling you all the different things that you can do that are available to you. Right? I want to show you the whole picture, all the things that are available to you. Now, this isn't the kind of trading that I do. You know, you guys, anybody that knows me that's been trading with me for years, you know that I don't trade. First of all, I don't trade on minute charts, and second, I don't trade Forex. You know, I trade futures primarily. But you know, this is more my speed. This is a 10 range gold chart, and this is more my speed. Now, with this, I wouldn't be doing the mid-trend trades. I think the sniper trades are, you know, they overlap sometimes, but I think the sniper trades are better than the mid-trend trades. That might answer one of your questions, Jeff. And if you're just looking for trades that are at the beginning of the trend, you're probably going to want to turn on the bias. Alright, so you're always trading with the bigger picture. So, you know, turning on the bias, what that means is it's only going to give you long trades above, in this case right here, because I left it as default, the 233. That's a 233 simple moving average. So it's only going to give you long trades above a 233 simple moving average and short trades below the 233 simple moving average. Okay, and that's just for your basic TV trades. Now the things that are triggering over here, they are just your basic TV trade. Some of them with the bias on, some with the bias off, but they're at these time frames that you see in here. And those trades are really, you know, they're really good. Most of the time, they're really good trades. You know, if we were to just click on one of them right here, this is a 50 range Microsoft at 1408 today. I don't know how that worked out. Here it is right here. I think that's it. 50 range Microsoft. Yeah, so it would be this one right here. So that one's still working out right now. It said, what was the target on that? What did it say? The target was 39.67. So it's almost up to the target. The target would be up here. This prior swing high right here is the target. Okay, and that's the way that it works. It looks back at the swing highs and lows, and it calculates where it should go based upon that information. All right, the stop with these is either the bar before it or the current bar. The low of either the bar before or the current bar, whichever is farthest away, is where the stop is going to be. That's how the stop works on that. All right. Where's my target and stop? Hang on. Stop loss on the NQ100 range. That's a good question. When it comes to larger time frames like that, larger range bars, this is on a Microsoft. Let's go to the NQ. Okay, let's go to the NQ. That's what the question was about. The NQ, and NQ1 is good for right now. For those of you guys who don't know, NQ1 means the leading contract. All right. So right now, this is the NQ1 is the Z contract right now, but we're going to be rolling over this month in about a week. We're going to be rolling over. So the NQ1 is going to roll to the H contract before we're probably ready to roll to the H contract. While there's still most of the volume is still going to be on the Z contract. But the question was, for the TV trades on 100 range, what is my stop? Well, the thing about the 100 range is when you get a trigger on 100 range, especially if you're using the sniper, let me shut that off, put the sniper on. Especially if you're using the sniper should be on the pivot bar, all right? It should be on the pivot bar. That's when you should get your snipe, okay? So your stop only has to be lower than the bar that got you into the trade. All right? It doesn't have to have a huge stop, just lower than lower than the bar that got you into the trade is the answer. Shab, okay? Now, I want to show you guys something else, right? I can leave that on or just put this on. And if we put TV trades on and we get rid of the actual arrows, all right? And we just have the background, the blue background, all right? And we throw the trigger on here at the bottom. TV trades range trigger. Now, for those of you guys who are in here, again, this is one of the things. Mark, are you in here right now? Let me see. There's a bunch of people in here right now, and I just want to see. Mark had asked me some individual questions, and I wanted to make sure I covered it for him. Oh, he's not here. Well, he's gonna have to watch it in the recording. Just make sure. Okay, I do have the recording on. Good. Okay. With this, when I say swing high or swing low, which was in a response that I said to him, which is one of those things that got me to want to look at the whole picture here. When I talk about swing high and swing low, sometimes that's something that people don't understand. Okay, so the way that the markets work, and I say this all the time, but if you don't hear me all the time, then you don't know. But the way the markets work is always the same. They go up, and then they retrace. This is the swing high. The minimum that price should do is go back up to that. It should go twice the distance between here and here. It should go twice that distance. But the minimum that it should do is make this distance right here. Okay, so if I bring this right here and I use this thing, this is the minimum that it should do. But it should do that twice. Why? Because this is a 50% retracement, roughly. And that's what I like to look for, a 50% retracement of the leg up. And it should repeat this leg up. So if it's going to repeat that leg up, and this is 50%, well then from here to here is 50%. And from here to here would be 100%. So what you should see is this leg right here, this one that's like this, repeat itself from right here, up like that. That's the way the price works, all right? And it keeps working like that again and again and again until the market doesn't have any more in it. And then it pulls back and it doesn't go up that far. And then it pulls back deeper and it doesn't go up that far. You see? Like that and that. And then it changes direction. So when I say the swing high, the minimum that it should do, this is what I'm talking about right there and right there and right there. And when it goes in the other direction, the swing low is right there and right there. And it would be right here if this were to turn back up. That's the minimum that you expect a trade to do, is go from here to here. All right, the minimum. So, yeah, on the NQ at the 930 open on 100 range, it works really well. Shab, I don't know if Matthew's in here. That's Matthew's trade. Is he in here right now? Not wrong Matthew, but there is Matthew in here, but not the Matthew that I'm talking about. That's his trade. He likes to trade that first half an hour, and he likes to trade on 100 range NQ. And a lot of times he'll get it on one trade. He'll get his 100 ticks on one trade, and that's what he looks for. Using 100. Think of this down here in the trigger, to get from here to here takes 2 bar lengths. Okay, and if these are 100 range bars, that means it's 200 ticks from here to here. All right, if it goes straight up, it's 200 ticks. Now, it's usually not going to go straight up. It's going to pull back and get a pullback on every bar like this. So it'd be like 150, 125 to 150 ticks to go from here to here. It's going to be 2 up closes that's going to get you there. Okay, so if you think of it that way, when you're in the oversold like this, it's going to take 125 to 150 ticks, possibly 200 ticks to get back up into the overbought. So like right here, for instance, it took this up close and then this up close. And so if you traded after it came out of the oversold, if you traded right here, you're halfway there. At 440, you're halfway there. So another 25 points from 440 up to 465 is what you should expect out of this, right? And where does that put you? Right there, 463. The swing high is right there at 464 and a quarter. So that pretty much puts it right together right there, right? Does that make sense? Okay, I want to cover, yeah, and it's $500 a contract, right? Easier if you're doing the micros, it's $50. But there's no shame in doing micros either. If you do 2 micros, it's $100. But it's getting the repetition of the pattern over and over again. That's what you want to do. And I've said 100 times, 1,000 times, maybe way more than 1,000. The idea is not to sit here and trade all day. The idea is to get in there and make some money and stop trading and stop putting yourself at risk. All right, that's my idea anyway. That's what makes a successful trader. Listen to me. That sounds like I'm back in Boston. A successful trader is a consistent trader. All right. Now, you might be consistent with the micros, so your consistency is making you $150 a day. When you're making a whole bunch of ticks, but you're making $150 a day doing it. It's 300 ticks. When you decide that you want to go up to, the full size contract, heck, then you're making $1,500 a day for what? What's the difference? What are you doing different? Nothing. Nothing. And it's 10 times the difference in money. And you're not doing anything different. All you're doing is taking the same exact action, doing the same exact thing over and over again. It's just now with the full size contract instead of a micro. And there's no shame in the micros. The micros have more liquidity than the full size contracts do. It's come a long way. Back when they first came out with the micros a couple of years ago, there was no liquidity in them. There were spreads on everything, and the commissions were prohibitive. We'll just say that they were too high. They were charging just a little bit less for the micros than they were for the regulars. Like $3 for a micro and $4 for a regular size, and that was just, there's no way that was going to work. But now they've changed all that, and now it's like 50 cents for a micro, and and that's acceptable. So when I say what you expect out of a trade, you should be able to figure this out, but you don't have to. You should be able to, but you don't have to. It does it for you. If you put the thing on here, if we put, is it in the sniper? Yeah, okay, I guess this is what I was looking for. It figures it out for you. It tells you, it tells you where the target should be, what you should be looking for. Now, sometimes this target is going to be really close, and sometimes it's not. If you go back here to where we currently are, the last trigger, let me put the Let me put the actual thing on there so we can see when the last trigger actually was. Am I actually showing it here? I am. Okay, so the last trigger looks like, oops, sorry. From wherever the last trigger was, back here. Alright, the entry was 985. Right here, the entry is 985. And so, this is your prior swing high is right here. And what's your first target? Right there, the prior swing high. Alright, now your next target, there's two schools of thought with this. Your next target can be, yeah, Daryl. I'll answer Daryl's question in a second. Let me just finish going this train of thought here. There's two schools of thought with this, right? One, if you go with what Price has given you already, right? You use this information that you have right here. That's what Price has done before. So this is the last area of resistance that it found, and it's going to go to that last area of resistance. And then if you're using the historic price, we're going to go back and we're going to find, well, if I put the lines on, you can actually put the target lines on here. Right? If you put the target lines on the chart, then, alright, so there's this one right here, and yeah, this one right up above it. But the next one up above is 2124. So if you go back, you'll see where that last one was that was right up above it. So there was one right here. It wasn't even using that one that I was looking at. Or I guess it was. It was using that one right there. And then the next one is right here. And the next one is right here. Now if I spread this out a little bit and show it like this, you'll be able to see a little better. But that's the information that it's getting. It's going from here to here to here. Now that's using historic price action for your determination of where price should go. But let me show you something else. Alright, when I said there's two schools of thought, that's one school of thought. But let me show you a different school. Okay, we'll go back here to where our trade was. Alright, so this right here was our first target. This is what it said, and this is what you should have been looking for. The prior swing high at a minimum, the prior swing high. But remember what I just told you a minute ago? About this right here. You know, you have this level right here. That is half of, if it's a 50% retracement of the leg up, then that is half the leg up. So it should do that twice. It should do that twice. So if you look at that again, once it exceeds that, it should do it again. So if you take this line right here, this one that I drew right here, let me make this a little darker so you guys can see it better. Okay, thicker. Okay, if you take that line right there that I drew and you do it again from over here where it exceeded it, that's what you should expect out of it. Alright, once it does this first bit, it should do the second bit as well. You see that? Does that make sense? Okay, so that's how you can see what to expect out of a trade. You know, getting in a trade is easy. Anybody can get in a trade, but know what to do when you're in the trade. That's where the real money is. Alright, so the first thing you should expect is that it's going to get up to here, the prior swing high. This is for Mark. Mark is the one who asked that. He's not in here right now, but he was the one who asked that question. This is your prior swing high, and after it gets to that prior swing high, it exceeds it. A lot of times you're going to get a pullback, but it should double it. Alright, and why should it double it? Because this was the leg length that you did a retracement on. Now this isn't really a great example of it because the retracement, you know, the leg length itself starts down here and it goes up to here. That might be okay. It starts there and goes to there, so your retracement is going to be based upon that. This leg right here. Oops, I'm going the wrong way with that. Hang on. Let me just delete that. Oh, I grabbed the wrong thing anyway. I want a fib retracement. This is what we're looking at. Right here is your 50% mark. Right, so I guess it was pretty good. The yellow right here is your 50% mark. And that's what you're expecting it to retrace back to the yellow and then move up. Oh, I'm sorry, the green one is your 50% mark. Oh, I'm sorry, this is a different account. The green one is your 50% mark. So it did retrace exactly 50%. And so this is the leg length right here that you expect it to repeat. All right, the green one here is 50%. On my other account, the yellow one is 50%. But so you expect it to repeat itself right there. All right, that's what you anticipate out of every trade. If it's going to continue the leg length, it's going to do that leg length and continue. All right, Now, the question that Daryl had, any good range bar for use on the ES as there is not as much movement? Well, in the morning session when I trade the ES, I traded on the 7 range. And I'll show you something else that I have going on in the morning session, okay? Let me put this on the ES and I'll answer your question with some good information, I hope. Okay, on the ESZ contract, and we do it on a 7 range in the morning. And some days there's some pretty good range to it, some days there's not. This is today, is right here, so there was one TV Trades trigger right here, I think, or 2, I guess. 3. 3 of them. There was one here at the open that would have stopped you out. The stop would have been right here on that, so it would have stopped you out. There was one right here you could have taken some nice profit on. The entry point would have been here at 85 and it ran up to 88 and a quarter. So 3 points, which is more than a goal for the day for me. And another one right here, 83 and a quarter, and your stop would have been down here on this one. Your stop would have been down here on this one. It would have been down here, right here on this one. So from here, the entry point, first it went 83 and a quarter up to 89, which is a nice run all by itself. But then it ran again. If you stayed in it, you could have ridden it all the way up the rest of the day, but if you didn't stay in it and you got out, you could have triggered again right in here. Now, I don't have the mid-trend trades turned on, I don't have the sniper turned on, but anytime you have a blue background like this and you're coming off a higher swing like this, you have a trend that's developed, you're coming off a higher swing like that, anytime you have that and it pulls back and it comes out of the oversold with the trigger, that's usually going to be a pretty darn good trade. Okay, anytime it does that. We're in the middle of one right here, right now. Okay. Yeah, the volume was pretty low today and yesterday. Today we had some news today that came out. That was the Beige Book came out. We had some more news earlier today that came out. All the news was bad. But Powell was speaking 15 minutes before the Beige Book was due to come out today. And the Beige Book used to be able to move the market by itself when it came out here at 2 o'clock, right here at 2 o'clock. See, it was pretty bullish. But, so there's stuff this week. It's the first week of the month, and the first week of the month is the week that's got the most news events in it, right? The most significant news events. So we have, tomorrow and Friday, we have a bunch of news coming out that's going to move the markets in the pre-market mostly, at 8:30 in the morning Eastern time. All right, so Daryl, to answer your question, can we utilize TV trades without having TradingView? You can, yeah, you can. You can just go here to the web page. Let me see if it's come back to life yet. Where was I looking at? This, right? Let me refresh it. You can just go to this web page. This is me right here. Okay, and in here you get what you're getting right here. If you're trading the futures. Trading the futures, you're going to get just futures long trades. If you say, if the market is on a bull run for some reason and you just want to go long trades, you can come in here and we have the gold, the YM, the ES, the NQ. I think I have gold, YM, ES, NQ, and the Russell are the markets that I have in here. And you can see most of them today were crude oil. I guess I have crude oil too. Most of them today were crude oil and gold. A couple of YM trades in there. Weren't many YM trades at all today, but you can just scroll back. It's got the little arrow right here. You can barely see it, but it's a little arrow right there, so you can scroll back and see all the trades that triggered. And you can see what time frame it triggered on too, so you get an idea of what to expect out of a trade. Right? If it's a 19 range and it's triggering, if it happens to trigger, without looking at any charts at all, Jeff. The question was, can we utilize TV trades without having TradingView? You can utilize it without having any charts at all. All you need is a DOM to put the trade on. It's got the price, it's got the target, and it's got the stop. If the target is really close to the price, then that's just because the prior swing high is really close. But if you're looking at a 19 range, like a 19 range, and your target is like 10 ticks away, well, then you don't have a very deep pullback in that case. Okay, because it's looking left, and it's looking left to find the nearest target, and you're not in a very deep pullback. So without having any charts on at all, you can see that that's going to be a quick trade. If it's going to be anything, it's going to be a quick trade. And your stop, you got to be cognizant of your stop compared to your target. I was going to do a risk reward in here too, so you could see based upon the information that we give right here, if your stop is bigger than your target, then you would know without having to do the math. I may still do that. That'll probably take some of the work off of you guys if I do that. And so all the information is there. So you don't need to have any charts at all. You just need to have a DOM or some way to place the trade. Okay. But yeah, that was the whole idea behind this. And I had when I first created this, I first showed it to you guys 3 weeks ago, I think. The comments that I was getting, well, first of all, I didn't have the sorting thing working right, so you didn't have the most recent stuff at the top. The most recent stuff was over here on the 18th page at the bottom. So I had to fix the sorting thing to get the sorting thing to work right automatically. So it automatically pulls it. It automatically pulls it from the sheet that it's on, sorted, and it just displays it in the table. And when it gets in the table, anytime you add something to the table, it automatically sorts the table again. So I had to do all that to get it at the top. But the problem was, this doesn't refresh by itself. You got to refresh the table to get the most current information. I have the time right here of the last update. So, I haven't updated this table. I haven't refreshed it. And I don't know if you've got any more signals in here on the futures. We probably have had more signals in here on the futures. So if I were to refresh this table right now, you probably see some more trades there at the top. But if you get your Telegram set up, the Telegram works all the time. All right, so we're looking at futures only. So you look at the futures Telegram channel. It's this one right here. So this trade right here, this was the last trade. No, it was 1318. 118 was the last trade showing on here. So if I refresh this right now, it's going to show these trades here. This one that happened at 305. This one that happened at 225. This one that happened at 207. This is the last one that it's showing right here. Is this one right here. So there's been 1, 2, 3, 4 more trades. If I refresh this right now, it's going to put all 4 trades on top of that. So if you want to get stuff, the most immediate stuff automatically generated, get the Telegram channel. Okay, get that Telegram channel, and you're all welcome to get into this. Anybody who is either on the trial or who is an active member, you can join these Telegram channels. All right, Telegram is free. All you have to do is go to telegram.org, follow the instructions. When you do join, you'll be sent an email that tells you, that gives you a link to just click on, and it'll just put you right into these channels. When you do go into the channel, give me your name, all right, so I know who's in here, because every now and then I go through and I have to go through all the names of the people that are in there, and I delete the ones that I don't know. So, but the Telegram is real time. When these trades trigger, they go straight to Telegram. They go to the place where this is reading from, also in real time, but you got to update the page to get it. Like right now, I'll try to update this page. Oops, I didn't mean to do that. I'll try to update this page, and hang on. I don't know what I just did, but I'll try to update this page, and there it goes. And hopefully it'll load up pretty quick, but no guarantees. Okay, well, it was the futures long signals that we're looking at, and this is still just showing that. And this is, okay, it was the short signals that it wasn't showing, the 1505. So I guess we had a bunch of puts, a bunch of short signals that weren't showing. The last long signal was in Telegram. The last long signal that we're looking at, I guess, was up here. But all this information is there for you, and it's really easy for you to get. It's really easy for you to use. And go to telegram.org to join the Telegram channels. Okay. When you join with us, and again, let me show you how to join. You gotta go to not there. I guess, what page am I on? TV Trades. I guess you can go to just to tvtrades.com. tvtrades.com. You just go here. If you're not using this, just click on any one of these orange buttons. It's going to bring you down to the bottom, and you sign up here. This is a free 3-day trial. All right, free 3-day trial. And you can sign up for the weekly if you don't want to you don't want to spend a whole $90 all at once. You can sign up for the weekly, and hopefully you'll get enough experience with it in a week that you want to go for the cheaper plans. If you want to, that's up to you. But yeah, Gordon, I see you just joined, and when you signed up, for the trial, what are the trades in Telegram based on? It says what they're based on. Everything, I put that in there. It says right in here everything what it's based on. This is a 100 range, this is a 50 range, a 50 range, a 50 range, a 100 range. I want to put that in there for you guys so you have an idea of what to expect out of a trade. Because if it was on like the golds, you see a lot of gold trades with a 10 range. Now I did the 10 range on gold because it didn't move around all that much, but it's triggering 50 times a day, so I might change that to be something bigger, like maybe a 20 range. There's a lot of gold trades that trigger in any given day. There's 1, 2, 3, 4, 5. 5 in the last, since what time was this one at? 12:18. 5 in the last 4 hours. But the Telegram's real time, and Telegram you can put it on your phone. You actually almost have to put it on your phone, I think, to sign up for it. You gotta scan a QR code with your phone, and that gets you signed up. And then you can turn the notifications on your phone, and so anytime one of these pops up, you get a notification on your phone, and that is really handy to have that happen. Now, I don't have this giving the pre-trade notifications, all right, like all the warnings or all the they didn't want me to use the word warning, but whatever the word is that I did use, notices, that's what it is, all the pre-trade notices and notifications. If you go into the alerts in here, and choose the sniper under here. Nope, I didn't put. I put him in the sniper. Wherever I put him before. I guess I did him in the TV trades. They must be in here. And if you go in here, the notifications. Well, anyway, their notifications let you know ahead of time that a trade is likely to happen. And you get those when you have blue on a red background. It says get ready for a long trade. Or if you have red on the blue background, it says get ready for a short trade. If you have the black arrows, it says get ready for a long trade or a short trade. And I didn't really get into the sniper all that much, but one of the things about the sniper, you can get a notification with this to let you know ahead of time that you got a trade that's probably gonna trigger. Sniper long next up close, and then short next down close. The aggressive snipers, you can turn those alerts on as well if you want to. Now, I haven't really gotten into the aggressive sniper too much because you guys haven't asked about it too much, but all right, Wayne. But one of the questions that Schwab had asked earlier, the sniper trades like this, they should be on the pivot bar. All right. So if you're on 100 range, your stop has to be like 105 ticks, just beyond the bar that got you into the trade. And it should keep you in the trade. If it doesn't keep you in the trade, then it's probably not going to work out. All right. Usually it's gonna go to the point where you can move your stop to break even, and you'll be all right with that most of the time. Okay. One of the other questions that I got was, what if you have something like this, where the first one doesn't make it and it stops out? Do you take the one right after it? No, is what I would say. All right, because what I said earlier when I was drawing that stuff earlier for you guys, a good trend goes up and down like this, right? And if it goes like this and it goes up and it doesn't exceed the prior swing high, and then it goes down and then it goes up again, it might exceed the prior swing high. It might go up and exceed this level right here, but the trend is weakened right through here. So if you don't exceed the prior swing high on this, then you have a weak trend, and you probably want to stay away from that. Okay, it may continue up, but you probably want to stay away from it. All right. So John F. I don't know. Are you still in here, John F? I know we had some people that have been in here for the first time. Okay. We had some people that have been in here for the first time, and I just want to make sure that everybody understands. I mean, I'm showing you a lot of things, but you don't need all these things. I mean, you don't need any of these things. But I'm showing you, if you want to become a trader and you're going to use your charts, it's good to know these things. It's good to know this information, what to expect out of a trade. All right. If you're just going to trade off of the signals that are generated, in these tables, that's fine too. But it's good to know where those signals are generated from. All right. Now you understand a little bit more about where these signals are generated from, like all this stuff. The 20. This was a short, right? So the indication was to short here at 75.2, and the target was at 26.71, and this is what gold 10 range sell at 3 o'clock. Let's go look at that. Gold 10 range sell at 3 o'clock. This should be it right here, right? So let's look at this. Let's go here to 3 o'clock and see what it looks like. Well, it's somewhere in here. This is where it is right here. We don't have it on the chart right now, but this is where it is right here. All right, so you understand. Yeah, let me put this on and you'll see it. And this is where it is right here. It was a gold 10 range sell at 3 o'clock. And right here it said the target should have been this down here, I think, is where the target probably was. All right, if I hover over this, it says current price 2675.2, target 2671. That's right here. This is your target. But now you understand why that's your target, right? And if it did get down to that target and exceed that target, you understand what it should do, right? Don't you? It should actually do twice that target. What it's doing right here is a pullback within this move down, and that's okay. This is the way that the market is working right here. All right. Remember I said earlier, the price goes down, then it pulls back, then it goes down, then it pulls back, and then it goes down. So these are the leg lengths it is established. That one, and this is what you expect out of it. It's as simple as that. And that is going to get you down to the target, right? The target that's already down here, this target that's already been established, is going to be the next leg length. It's going to be within the next leg length. That's the leg length that was started, right? And then it continued right there almost perfectly. And then if you drop this right here, it gets you down to that target. Do you see what I mean? It's like trades within a trade. And that happens over and over again. Now the indications, they do all that for you. You don't have to do all that math. You don't have to think about it. You don't have to look at the chart. It just tells you what to expect out of the trade. You see what I mean? That's the idea behind it all. So you don't have to think that much. Would it be possible to have the trades available for Ninja? Well, you can place them on whatever you want to place them on, Jeff. I'm not putting the indicators on Ninja, but these right here, they're out in Telegram and they're on the web page. So you can take them off the web page, this web page here. These trades, this is on the web, so you can take these trades and put them on any platform that you want. That was the beauty of it. So you don't have to use TradingView. You don't have to use now because DT Pro, the thing that I trade on all the time, is being decommissioned next Friday. This thing that I've been trading on for over a decade. This is the only thing I've traded on for over a decade, is being decommissioned next Friday. And those of you guys who follow me on a daily basis, this is Sierra charts, and this is what I'm going to go to. This is the next thing that works for me. It works just like this. As far as putting the trades on, like I right click there and I right click there and it puts the trades on with the brackets and all that, and so functionally it's all the same for me. It's not the same to look at. It's pretty close. This has got actually way more bells and whistles than this does. Way more bells and whistles than this does. But but I don't know how to use them all yet. I know how to use what I know how to use, and that's to make it act just like the other one. And I've got that down. But that's what I'm going to have to switch to. My broker, StoneX, is decommissioning DT Pro, or the DT Pro white label. If you have your accounts at Cannon Capital or Apex or Zaner 360 or Stage 5 or Global Futures or any of those places, they have white label software that's the same thing. It's just got a different name on it. It doesn't have DT up there. It's got something else. It's all getting decommissioned. So all those people are going to have to go to something else. Now, StoneX is pushing you towards something, a totally different platform. I'll give you a little look at that. This is what StoneX is pushing you toward. This is CQG, but it's a StoneX version. They gave StoneX their own version. I'm not going to go into any detail about that, but that's what they're pushing you toward, and I don't like that one at all. So I'm not going to use it. It's functional, it works, it gets everything done. But if you have an account at Ninja, Jeff, which is what you were just asking, if you have an account at Ninja, then none of this is anything to you. None of that changes anything. You don't see the futures historical trades probably because you just joined. Yeah, because you just joined the Telegram group. Yeah, you're not going to see them there. If you go out, Gordon, if you go out to the web page, and you'll see them all in here. Okay, this has all the historical stuff. I kind of try to hang on. I have a drink. I try to limit these to like the last 100 trades. Right? I mean, you don't really need to see more than 100 trades on any one of these, but I kind of like, so you don't have like 85 pages. You know, you only have about 10 or 15. Or if I can get that other page to load, not this one. If we go here to trade table back. No, I didn't want back 6. I just want back. I don't know why it always does that. But the one with the Forex on it. I was gonna put the Forex all the way through today, but I didn't get it done. Well, I really didn't want to. This is enough information for you guys right now. You don't need anything new. The question for anybody that's switching or jumping into the Telegram channels right now, you're just going to see from the time that you joined what's in the Telegram channels. Okay, but they'll be, Gordon, the stocks aren't going to kick off anymore after 4 o'clock or 4:15. The stocks won't kick off anymore, but the futures will be going all night long. So you'll see the futures stuff loading up all night long once the markets open back up at 6 o'clock. It's round the clock futures trades. And the Forex actually stops too. So the stock and ETF stuff, that cuts off, and then it starts up again the next morning. Okay. Now, something that is worth noting, guys, I meant to say this in last week. I'm going to end up running over a little bit here, but something that is worth noting for all of you guys. If you get an indication on these stock and ETF things at the end of the session, like you get a call that says, there's a reason to buy a call here. If you look at the options on that, if it's at the end of the session and you look at the options on that, usually there's going to be a big change by the time the markets open up again the next day. There's usually going to be a big change. So if you were looking at overnight options on that, if it's ETFs, for instance, ETFs, they have expirations every day. But if you're looking at particular stocks, like the ones that I have listed in here, Tesla, Microsoft, they have weekly options. So if you're looking at the next weekly option expiration, whenever it happens to be, if you get an indication at the end of the day, usually the day after when it opens up, that option is worth a significant amount more. All right, whether it's a put or a call, that is usually the thing. Okay. You do want to switch over to that? Can I switch you over next week, or do you have to change it? You have to actually change it. Okay. You change it, and then I'll see it, and then I'll, prorate it or whatever. Toby, what are the Telegram channels name? You're having trouble joining it. I'll resend you the link, Toby. Okay, it has in it. I'll show you what it looks like. Hang on. I'll show you what it looks like. It looks like this. If I go to compose and I do template and I do welcome. Okay, I don't think I can show you just this little bit there. Now I can. Okay, so this is what the email actually looks like, and it says the Telegram channel in here, or right here. Join the Telegram channel. Join here now. I got to update that because there's 2 Telegram channels. But you just have to click the join here, and that will get you into one of them. But I got to upgrade it so it has both the Telegram channels in there. Oh, no, here it is right here. These are the Telegram channels right here. It is in there. Okay, good. All right, so I have both Telegram channels here, and that was the other public Telegram channel. This is the private Telegram channels, all right, and the private web page right here. This is the email that you get when you sign up or you join. So you already have this, Toby, but I'll send it to you again. Okay. Here, I'll send it to you right now. Now that I'm in it. Here, it's on its way. Ness. To trade the QQQ, will the range bar be automatically set? Or is there a formula to figure out the range bar size for the instrument of interest? Well, let's talk about the QQQ for a minute, alright? When you're talking about things like that, you're talking about the ETFs, like the QQQ. Come on, here it is. You're talking about the ETFs, right? The range bar, you don't want it to be a 10 range because every tick up and down is 1 penny, alright, with a range bar. So something that's $500 like that, you're probably going to want it to be like 100 or maybe a 250 or a 500 range, because with 100 every range is every bar is $1. Okay, Ness. So every bar is $1 in here, and you can see, I mean, it gave a great indication. Well, this was at the end of the day yesterday, and that's what I was talking about. If you get one of these at the end of the day, usually by the next morning, if you bought a call option yesterday at the end of the day, well, this was Wednesday the 27th, but if you bought a call option on Wednesday the 27th of November, if you bought a call option then, by the next day when you woke up, that call option was worth a bunch more money. But with the QQQ 100 range, every tick up and down is 1 penny. Okay, every tick up and down is 1 penny. Now, one of the things I meant to say, I think I did say, but I'll say it again. When you have the blue background, you're in a bullish market, right? When you have a red background, you're in a bearish market. When you have the blue background and price pulls back and it gets this trigger oversold, when you come out of the oversold and you have a higher swing, you're usually going to have a good trade on your hands, all right? And that goes for any time. Anytime. If you have the lower swing or the higher swing, depending on what direction you're going in, like you had this trigger right here that sent you down here. If you traded, if you bought some puts on that and took some profit down here, or if you sold something short up here and you took some profit down here, when it pulled back up right here, you didn't get another indication up here, but you did down here. So you could have done it again right there on the down close, all right? All right, great. Richard said, by the way, I'm smoking it with the sniper as long as I stick with the rules. That's awesome. So in regards to the stocks and ETFs, 100 range bars should be a minimum. Unless you're doing really shorter time frames, like some of the alerts that pop up, like for the Tesla, I do that on a 50 range sometimes. But the things that are higher priced like this, usually I would do 100 to 100 to even more. Is the background separately colored? If the background is separately colored, the bias that you have in here has nothing to do with the background color. The background color is a total separate thing. It's like 6 different things that go into making that the color that it is. Okay, Gordon. All right, Tom. Thanks for coming. Is the background color the context? No, it is not. I mean, you could call it context, like it's bullish context and bearish context, but it's not the same thing as the context that you're referring to. You're referring to the context within this guy right here. The context here is more of a horizontal thing when it loads up. If you put the context on, it's in here. You're talking about this context. That's a different thing altogether. That goes horizontally, not vertically. Okay, and that's not what it is at all. But it does give you a bullish, when it's blue, you're in a bullish market, and when it's red, you're in a bearish market or a transition market after a blue. Okay. Can you get the context ribbon? You mean just the regular ribbon that goes with this? Gordon, that you get with the Trading IQ stuff? Inside the sniper, you can go inside the sniper here like this, and if you go to inputs, change this to 777. That ribbon? Is that what you mean? You can get that by doing what I just showed you, but the other one is TIQ. I don't have the context indicator as part of this, as part of Trading IQ. Okay. But this is how you get the ribbon, if you want to have the ribbon up there. But remember, I created this so you didn't have all the squiggly lines, you didn't have all that stuff to help you, that might confuse you or might make you second guess your decisions. I took all that off the charts for you. So all you have right now is just color that says colors and arrows that say to go long or go short, with the actual target numbers to go long to, risk numbers to put your stop at. And if you add this down here, then you can get more indications without having anything else on the chart showing you, like arrows, like mid-trend trade arrows or sniper arrows. You have this down here that can help you get into trades more if you want to. Okay. And I'm telling you, when you have a red background and you're pulling off a lower swing like this, a lot of times you're going to get the sniper arrow with it, but if you don't get the sniper arrow with it, like this one right here, that's an awesome trade right there. And if you had an indication at the end of the session to go short at the end of the session, this would have been a huge move right there on the QQQ. Okay. Can you text me to set up for a call? The call we never had, Wayne? Yeah, you can. You can. I know we've been trying to set this call up for a month. Alright, I've run over a little bit, guys. I kind of like to keep these things to the 1 hour time frame. I do want to answer all your questions, though. I want to give you guys all my phone number, alright? Text me at this number. You ready? It's 617-943-3298. 617-943-3298. Text me at that number if you have any questions, alright? That's the best way to get a hold of me. Don't call me because I don't answer the phone. But you can text me. That's the best way to get a hold of me. If you want to set up a meeting with me or anything like that, to get any kind of a response out of me, that's the best way to do it. I get 1,000 emails a day, and so I try to look at the emails, but stuff gets lost in there. Could I show how the sniper works on the NQ? What does that look like? I'll show it to you in just a second, Jeff. And in here, not on that one, this one right here, this certificate, that's his certificate right there, the 150K rhythmic. But Gordon, so not all oversold or overbought conditions in the trigger will print an arrow. That is correct. No, that is correct. It's not the trigger that prints the arrow, not by itself anyway. Going back to what we're looking at here, where you see where it came out of the oversold, actually didn't come out of the oversold right there, but that one we were looking at a few minutes ago on the QQQ, that was a short trade somewhere where it came out of, this one right here, where it came out of the overbought, did not give an arrow right there, came out of the overbought, did not give an arrow right there, and those, of course, you wouldn't be looking for short trades there, you'd be looking for the long trade in here, but and Scott, my number is 617-943-3298. Make sure you give me your name. I have most of your names in my call list, but I don't have everybody's, and sometimes you guys call from different phones. So you gotta make sure you give me your name when you call. Okay. And the sniper on the NQ. Let's go back to the NQ just really quick. We'll jump onto the NQ. And again, you guys, if you're not part of this yet, you should really get joined up and at least get into the trial at this point and see if you like it. Because the more stuff I add, eventually the price is going to go up here because I keep adding more and more and more value and keeping the price the same. And it's going to work out for those of you guys who are already in, but for those of you guys who haven't joined, no, it's not going to work out for you guys. You need to join and get your feet in there. This is the NK with the sniper on it right here. Okay, Jeff. And I know, I know Richard is using other stuff with this, other stuff that you have access to. I'm not exactly sure what he's using, but you guys have access to the same things. But I'm not exactly sure what he's using. That's his thing, and if he wants to share it, he can. But but you see, I mean, it's just using the sniper like this is killing it. And if you add the aggressive sniper, it's usually going to be the bar after this. Most of the time, it's going to be the bar after this. And what the aggressive sniper does is it starts in the middle. Remember how I said it takes 2 bars to get from the oversold to the overbought? The sniper is going to be the first bar, and the aggressive sniper is going to be the second bar. All right. If I put that on, I haven't even talked about the aggressive sniper today. Show arrow for aggressive sniper. There it is. All right. Now, if you're going to do the aggressive sniper, you want to do the bias on that too. But you see, the first sniper is going to have a trade right here, and then the aggressive sniper is the one that pushes the rest of the way through. All right. That's why you see more aggressive snipers, because they don't have to come out of the oversold. All right. You see a lot more trades with the aggressive sniper than you do with just the regular sniper. Oops, I didn't mean to do that. I meant to go back here. Let's see there. See, this is the first push. Comes out of the oversold. And it's not necessarily this coming out of the oversold either. I mean, I think I created that before I created the range trigger. I'm almost sure I created it before I created the range trigger. So it's not even really directly related. Why did the snipe come off the chart? Is that a joke? Why did the snipe come off the chart? Because no, because I took it off. I went in here and shut it off. It's right here. Okay, that shuts it off, and that turns it back on. Or that turns it back on. That's why. Alright. It does sound like the beginning of a joke, though. Why did the snipe come off the chart? But you see, this is the aggressive sniper, and this is the part that pushes it to the next, to get to the extreme. All right, it goes from the mid to the extreme. That's what the aggressive sniper does. And all right, guys, I've run over by 15 minutes. I'm sorry about that. This recording, I haven't set up the one for next week yet. Normally, the thing that goes out after I'm done with this has one next week's link in it. But you'll get an email when I get next week's set up. All right, I'm not sure what I'm going to make the subject of next week's, but I wanted to show you guys. I wanted to start from the beginning and go over all the stuff that you have available with this. I still don't even think I got it all. I mean, Jeff, you were saying that there's so much stuff. How do you narrow it down? Trade one market. Find one market and trade one market. Find one trade setup that you want to do with one market. Now, for me, I'll show you what my favorite trade setup is. All right, I described it to you earlier. And anybody that trades with me in the morning, I describe it almost every day. My favorite trade setup is this. And you need charts to see my favorite trade setup. You can't just take it off of the Telegram channel. But when price has a leg, and then it has a 50% retracement of that leg, and you get your trade indication right here, and it comes out of the oversold at the same time. It bounces off the BB, well, it bounces off of something right here. We'll say it bounces off of something right here. But it does a 50% retracement, and you get your trade indication down here at the same time. That's my favorite trade setup. All right, and it happens every single day. Every single day it happens. That's what I look for. Right? If you guys wanted to narrow it down, that's what I look for. But you have to have charts to do that. If you're just going to take the trades off of the off of the trade table, that's fine. These trades are great. If you look at the difference between the target and the stop, and it's not the right way. I mean, I think I put that somewhere up here, right up here. I say consider the target and stop suggested before entering any trade. Sure that any trade has a better target potential than stop. Right? So your target's always going to be bigger than your stop. Enter all trades with full knowledge of the risk disclosure. The risk disclosure is way down at the bottom. Of course, I have to have that on every page. Down here, risk disclosure. Right, but you want to have that in there, and I may add another column that has risk reward in here, All right, and you want your risk reward to be 1 or greater, and you know, that's it. All right. So again, if you haven't taken the trial, I mean, most of you guys stayed in there through the whole thing, so I guess I've been interesting enough. If you haven't taken the trial, then go to tvtrades.com or targetvtrades.com, either one. tvtrades.com, I think, is the easiest way to get to it. Just go to tvtrades.com and click on any of these orange things. It's going to bring you down to the bottom. You can sign up for the trial down here, get signed up, or you can go to targetvtrades.com, vtrades.com, and this is where the webinar is going to end up. Right, this is where you click on to get to this one. I'm going to have next week's in here pretty soon. Click on this to get to the trial. That's going to bring you down here. Looks a little bit different, but it's the same stuff. If you guys, again, you wanted to go to the annual, I got a $100 discount on the annual that I'm going to leave up for like another day if you want to get off the monthly and go to the annual. Or, you know, Richard, if you want to get off the weekly and go to the annual, it's going to save you like 30% if you wanted to do that. It's up to you. But I know you said you wanted to switch from the weekly to the monthly. It's up to you. I put that link in at the beginning. Let me go see if I can find it and paste it in here for you again. Here it is. Here it is. I'll paste it again for you. Hang on. Copy. And paste. There. Okay, so that's in there again. I think. I don't know. It's not a discount code. It's just a separate link. If you want to pay for the annual, it's just a separate link. Okay, here it is right here. I'll paste it again. Paste and send to all. That's to pay for the annual. The annual is $8.97 as opposed to $25 a week, which is, I don't know what that is, but it's 30% more than $8.97. And the $90 a month. $90 a month is 10% less than that. $9.97 a year is 20% less than that. And the discount, the Cyber Monday discount or the Cyber Week discount that I gave you is 30% less than that. All right, so you guys can do whatever you want with that. If you haven't signed up for the trial, sign up for the trial. All right, this stuff right here, I'm not even sure where that goes. So say no thanks to that. I'm not even sure where that goes. I'd get rid of it if I could. But this is on the targetvtrades.com site. All right, so all the webinars that I've done, if you go here to upcoming and past webinars, they're in here. Right, this was last week's, and all the ones before that, all the weeks before that, all the other webinars that I've done, they're all in here. And so you can go watch all of those if you want to, all the different things over the last year that I've done. All right, there's a bunch of information there for you guys. Again, you have my phone number. If you have any questions, contact me. And I'm going to wrap this up. All right, thank you guys all for coming. And thanks for all the questions. The questions make it interesting for everyone. And that's it. All right, thank you all. I'll talk to you all soon. All right, thanks for coming.